Hi, everybody. Thanks for joining me on this week's episode of Creative Real Estate Ownership. My name is Josh Silverman. Today's episode is called Oakland Condos Now. And I'm excited to talk about Oakland condos today because I think we've reached the bottom in terms of pricing, and there's some very interesting opportunities in Oakland in the condo market. So what inspired today's episode was an article I read in the San Francisco Chronicle on September 22nd, written by Christian Leonard. The article is called How This Oakland Zip Code Became One of the Weakest Real Estate Markets in the Country. That really grabbed my attention. They're referring to 94612 in Oakland. We call it uptown, downtown. It covers a couple of different neighborhoods and around Lake Merritt as well. And so it's a neighborhood or a zip code that was really booming prior to COVID. And when COVID hit in 2020, it really kind of fell off, and property values have really plummeted, and they haven't really come back. And so to think about it as one of the worst markets, essentially, makes me sad. I love Oakland. I co-own rental properties, two different rental properties in Oakland, and my two kids were born in Oakland. I was married in Oakland. I spent time in Oakland. It's been difficult to watch what's happened over in the city over the last few years. There's just been, well-documented issues, obviously, but spikes in crime have been a primary issue. There's problems with homelessness, and essentially, with those problems kind of not being contained, there's just been a lack of investment, right? And so that doom loop that people talk about sometimes in real estate has happened a bit in Oakland, right? But the good news is I think we're kind of out of that big decline. I think we're on the uptick. And so right now, I wanted to highlight the opportunities in Oakland. And, as an investor myself, and if I was thinking to buy a home with that kind of investment mindset, right? You often want to buy in an area that's about to turn, right? So you catch the price when it's low, and then it's about to turn, and you take advantage of some of that upside when it improves, right? So that's kind of the feeling that I'm having about this area, right? It's in this zip code, right? You have Telegraph Avenue, you have Broadway, you have all these restaurants, all these bars, you have Fox Theater, you have Lake Merritt, right? So it's just wonderful to walk in and have a picnic and all these good things, right? Jumping into the article a little bit, and the paragraph that really caught my attention was this one. Quote, "Home values have stalled out throughout much of the country over the past year, but in most major cities, they're still much higher than they were at the start of 2020, before the pandemic reshaped real estate. The same can't be said of Oakland's 94612 zip code, where values are down 30% from the start of the decade, from $796,000 in January 2020 to $558,000 in August 2025. That's the largest drop west of the Mississippi among the 10,000 largest zip codes, data from Zillow shows." Quote. So 30% drops, right? Massive. And that is directly related to those issues that I feel Oakland has kind of gone through, right? And what that means is obviously there was a time when people were fleeing. I don't want to be here. There was a kind of a feeling of lack of order and control, car break-ins. Those things are still issues. They're still happening now, but I do feel like they're less, and there's just not that feeling of kind of craziness, right? So if you're looking for a buyer's market, this one would be it, right? The concern when you're buying into a dip, right, is does it go lower, right? So does that 30% drop off turn into a 40% drop off? Now you drop further and you have to come up further, right? It's just kind of my feeling and my sense is that we're kind of out of this, the worst of it. And we're still in this high interest rate environment, right? We're still over 6.5. But if those rates come down and you are seeing a big push for housing in San Francisco. I also co-own a building here, and we lease it like that. It's just super easy. And speaking with a good friend of mine who's a property manager here, all of his units are renting fast, right? There was a time, 2020, 2021, whole buildings went vacant, right? That's different now. The rental market's heating up. Oakland should catch some of that heat at some point, right? So why do I like 94612 so much, right? So, in creative real estate ownership, I'm often thinking about ways to buy a property now, use it, enjoy it, live there, and then when you move, you keep it. You hold it as a rental, right? And so in 94612, there's this opportunity now in condos where you can actually live in a unit for, I still say it's a rule of thumb for me, stay in a unit for 5 years before the numbers start to really make sense to move out and cash flow. So there's condos now in this area that are really nice and beautiful buildings with views of the lake, right? That you can purchase now, enjoy, experience some of what I think is going to be price appreciation. So take advantage of some of the upside, and then move out and hold it, right? You won't hear me talking about that making sense in most markets. It doesn't make sense in Berkeley to do that, but here it does. So for instance, I pay a property at 1 Lakeside Drive, unit 916, sold. This is a 1-bedroom, 1-bath, 666 square feet. It sold for $395,000 in July of 2025. Now, that unit, it's in the Essex on Lake Merritt. It's a beautiful building. It was built in 2001. There's a swimming pool, and I think there's a gym and just wonderful amenities. And these views of the lake are fabulous. I've sold a unit in this building before. And there's these beautiful penthouses on top. So you can go very high end, or you can go this is the lower end at 3 for a 1-bedroom, but on the 9th floor. So just great views. At $395,000, I was like, okay, interesting. Like, are we in that sweet spot that I talked about where you can actually cash flow this unit? The buyer paid $593 a square foot for it. The HOA is $899 a month. That's a pretty high HOA, but you get a lot of amenities and it covers a lot in there. So it's not outrageous. I've seen $1,400, $1,500. Those give me pause for sure. So this is more reasonable. Now, you go in and buy this property. Let's say you come up with a 30% down payment. So you're putting about $118,000 down on the property. It's costing you about $3,000 a month to own on today's interest rate, right? And so hopefully you can refi that in a couple of years, right? But on today's interest rate, it's going to cost about $3,000 a month to own. Now, this very unit on the rental market is about $2,500 a month right now. It's not currently, like if you bought it and try to rent it, it's going to cost you $500 a month to own it and to lease it, right? Not good. Negative cash flow. Don't do it, right? However, you buy it now and the rents over time go up. Hopefully you refi that interest rate and so your costs go down, and maybe put in some more money, maybe buy that loan down a bit, and you can move out. It's not that far away. You can bring that $3,000 down, the $2,500 goes up, you meet at a point where it does start to cash flow, right? And so this didn't exist, right? In pre-2020, the same units is $500,000 or more, and it just, the numbers don't make sense, right? To do this, right? So this is where I think there are some really interesting opportunities, and especially like for younger folks, right? That really want to be near kind of hot areas and have a lot of activities, that they can walk directly to. This is just a good place to start for a first property, and with those HOA fees, with buildings that are well managed, well run, it's a pretty stable investment. It's a pretty, I don't say anything about a sure thing after having gone through COVID. You won't hear me talk about sure things, but it does seem like a good opportunity, right? So as a rule of thumb, each additional $100,000 in purchase price, you need about another $500 in rental income for you to break even, right? If this property was $495 instead of $395, you would need $3,500 a month to break even, right? And it goes up from there. And so that's why, you do get to a certain point where you won't hear me talking about cash flowing a condo at all, right? And that the rent's that the gap is too big. But right now is just an interesting spot to be in. And so like to get a house, let's say for $395K, that's going to be maybe a house that has a significant deferred maintenance. Maybe there's a lot of challenges in the neighborhood, right? And so yes, the rental value is going to be there for that one too, but I think you're going to have issues that you will not have in something like this building in this neighborhood, right? So I didn't identify one particular property I think is the deal of the month, but I am identifying this zip code as containing deals of the month. There's a few condos that look great in terms of the pricing, in terms of its ability to move out and cash flow long term. I think this is a great example of creative real estate ownership, and I think there's some interesting opportunities in this space. Try to get under $400K per unit, and it's not just in this zip code. There's other pockets for this model of moving out and cash flowing and holding and building wealth over time. So I hope you enjoyed this video. Please subscribe, like, and reach out to me by email. I'd be happy to talk to you and run through some scenarios and look at some financing and find some opportunities in what I'm finding are many buyers markets, right? Which is exciting. So don't leave the bag, get creative, and thank you for joining me today.